But let's move on now. KPIT Technology is a stock on our radar. Very strong numbers from the company. The dollar revenue growth has been quite strong. But the most important bit is they've raised their FY24 revenue guidance to 37%. Kishor Patil, the Chief Executive Officer at KPIT Technologies, joins us now to talk about that. Mr. Patil, thanks so much for joining in. You know, this is a very tough time for a lot of your peers, right? But at a time like this, you have come out and raised your guidance. So that's given extra confidence to the street. Tell us a little bit about that. You're already tracking at a 50% growth in the first half of the year. You've raised your full year guidance, revenue guidance to 37%. So what do you expect in the second half? And where are you seeing a pickup in terms of demand?
Yeah. Good morning to you. So I think this is not about one quarter. It is about the consistent strategy which we have been following for last 3-4 years. So I think we have got few things in place, right? I think first we had a very sharp focus on the new technology domains, which we have been talking about. So that is a one part. The second is we establish very strategic relationship with the companies who are committed to spend in this new technology area over many years. So that is the second part we did. And third, we invested into building new offerings in these technologies. So I think this is all is coming together. And in addition to that, at the beginning of these years, as you know, we signed some bigger engagements with our clients. So that gives us the momentum to go for the first half and then naturally sustain it to getting into the next half of the year.
Sure. So, Mr. Patil, can you just elaborate a little bit on this new technology domain? Because I'm trying to understand, since you have the commitment from clients to spend more in this arena, what does this mean for your operational performance? Because you've clocked in about 20% margins in the quarter gone by, the best that we've seen in recent quarters. Can you build on to this, and what would the exit rate be for margins in FY24?
I think, so let me just talk about, I mean, we work in typically 3-4 domains, and the one which really grew fastest was the architecture, the vehicle architecture, operating system, middleware. That's where we have been investing for a long time, and the technology investment we have made, apart from, of course, autonomous electrification, etc. So I think these are the two areas which really gave us this significant growth in the last 6 months, and will continue to give that. Now, from the margin perspective, our philosophy has been we will keep a margin. Earlier, I had mentioned between 18 to 20%. If 3 years back, if you go back, that's what I said, that margin will be between 18 and 20. As we get comfortable, we will, everything beyond that, we will reinvest into technology. So now we are saying that we will have the margin at around 20%. We'll invest everything beyond that into new technology or investments for growth. And as we become comfortable, we'll naturally are in a better position to improve the margins. So that's where we are. So that's why we feel confident about it.
Mr. Patil, hi, good morning. So 20% margins now, right? And beyond that, you said you will put it back into the business, invest in the business. So just a quick word on the deal wins, which actually, we're looking quarter on quarter, but it has come off. So $156 million as compared to, this is TCV, as compared to 119 the previous quarter. Could you tell us what happened?
No, I think we don't really look at the deal wins. So to tell you frankly, our business is a bit different. We have a certain set of clients, and we continue to engage with them over longer term. So during a particular thing, the business can get closed or not, but we get a better visibility over next 3 to 4 years, basically based on their spend over this period, these large programs. That's how our visibility comes. So there are quarters when it comes a little bit less and a little bit down, but basically what we are more concerned about is the medium programs which the client has and what we can do. So for example, at the beginning of this year, we said that as the environment is, we would like to accelerate our spend so that we can maximize the growth in the first 6 months. That's exactly what we did.
All right. Hi, Mr. Patil, and congratulations on a good showing. You're standing out in terms of revising your guidance as well as the momentum. Now, currently, you're clocking close to around, $590 to around $600 million. If I try to annualize the numbers that you're doing. By when do you get to around that $1 billion odd mark on an annualized basis? When do you get to that run rate? Which year?
So, Anna, I think we are doing our best. We said we see a very medium-term, very good growth. We said that our goal has been always to continue with the momentum. So I am not putting any goal to it, but I can assure you that we will maximize our opportunity, which is there for long term, and we are very well positioned to do that.
Mr. Patil, let me try to egg you on a little bit. You're doing close to under $150 million approximately. You leave the $1 billion, that'll be $250 million. On a quarterly run rate, when do you get closer to around the $200 million?
So I guess I don't want to give any answer on that question. But
is
as
it
you can
possible
see, we have been growing around, if you look at it, around 5 to 7% has been our growth. For some quarters, 5%, some quarters less. So anywhere between 4 to 7% has been our growth per quarter for many quarters, if not more. For example, this was a special quarter.
So by quarter 4 FY25, it's possible then, going by this run rate itself, that you're closer to around $200 million.
I mean, if you say so, that's your prediction.
That's the best answer, right, to every question if you say so. But if you can tell us a little more about what's happening in the commercial vehicle and passenger vehicle business, because that was a big growth area for you. And even if you go by what we saw in the last quarter, right, Mr. Patil, you've done over a 22% growth in the commercial vehicle business particularly.
Yes.
Can you build on to that momentum? And what about passenger vehicles?
Yeah. So I'll come to first passenger vehicle. I think there are, I have also talked about certain macro factors which we have to be aware of, right? While we had a very strong set of numbers, we don't want to be blind to what is happening, whether it is about, certain sales in the EV segments being little softened, the consumer sentiment, the economy softness. So we are aware of all these areas. Now, the point is, in these cases, what we have to see is in the medium term, all our clients, of course, everybody is committed to electrification, everybody is committed to autonomous, everybody is connected to connected and other things. What is that we can help them to reach there and solve their current problems? So that is exactly what we are focusing on right now. So to that extent, go to the commercial part. I think the fuel cell, their electrification journey is different than the past car. They have to do the fuel cell, etc. And we have already working on such production program for some large commercial vehicles, which allows them to really bring this technologies into production and integrate them. So I think our objective is have these long-term trends and keep a very close eye on what our clients are doing, where there is spend, where are their problems, and trying come proactively to solve them.
Okay, I think that's the best way to approach it, right? Sir, just before we let you go, we're running short of time. You have about 500 crores of cash on your books. Any more acquisitions that you're looking to do?
I need more cash actually on the books.
But
I'm sure that will come eventually. So you're saying that there is scope for acquisitions in the next 1 year?
Yeah, I mean, I think we are more focused on organic growth for now. But in the current situations, we would really like to conserve as much cash as we can. So that's how I would look at for now for KPI.
All right. We'll leave it there, Mr. Patil. Great speaking with you as always, and pretty confident out there in terms of growing business, long-term relationships, and maximizing that opportunity out there. Thanks very much.